because the construction activity have a high multiplier effect on the economy. Okay? It carries a 1.88 time of multiplier effect. So therefore, construction is very important for us to follow. Now, just now I mentioned, first catalyst, decent economic growth. And the second catalyst is ETP that will support the decent economic growth going forward, and not only for this year, but it will be years to come. And why is a strong economy so important? Because I think it is very supportive for the Malaysia corporate. Okay? Robert mentioned again and again that it is the corporate growth that we want to focus, because we are buying into the companies. The Malaysian corporate growth are very strong. 2009, we declined, but after that, you see quite a good growth. Of course, I haven't really showed this. This is actually something that we extracted from the Bloomberg forecast of the consensus. You find that actually 2012, people are already looking at decent growth, and 2013, a higher growth. 2012, we are expecting low teens to mid-teens level. You're talking about 10 to 15% kind of EPS growth for the Malaysian market as a whole. And the corporate are also very healthy. Look at the debt level. Of course, we are not talking about all different corporates. You know? We are talking about overall. If overall Malaysian corporate debt level is actually falling, you look at the net debt to equity ratio, we are falling to a very healthy level. Okay? And this is the forecast. Now, over the last few quarters, you find that there is negative revision. There is earnings downgrade. And the earnings downgrade is still happening, but we believe that the downgrade is actually at the tail end. Just like what Robert said, that it could actually have another quarter or so of the downgrade. For Malaysia market, we're already seeing analysts started to upgrade some of the number after the recent number release. So we believe that it is at the tail end, or more positive side, they could start revising the number up a little in first quarter of this year. Okay, so we are talking about whatever that's negative is already over. So it is actually very positive to the whole market if Malaysian corporate continue to deliver a decent earnings growth. The fourth catalyst I think is very important, and Robert did mention is very, very important. It is liquidity. What has supported the market so far is the local liquidity is very strong. We haven't even talked about foreign liquidity. If the foreign liquidity really flow into Malaysia, you will find that Malaysia is a very different valuation from what we are currently enjoying. We're just talking about 14 times. When we talk about 14 times PE, people thought it's about there already. But you look at the early 90s, we are over 20 times PE. Whether or not we will go back to that level, it may be a bit too far for me to say. Okay? There's a lot of things that we need to deliver from now. But the local liquidity alone, it is pretty strong to support the market. Therefore, Malaysian market always have an angle to play for the investor. If investor like Asian story, I myself like Asian story. And we have a China fund, so we like the China story. Of course, it's very great because of the valuation is very attractive and the growth is very strong. Okay? But as an investor, you may have different risk appetite. Some investors, they like equity. They also want to ask them to buy everything in Asia. They may not be comfortable. So they want to diversify. They can park a bit on Malaysian market because we know Malaysian market very well, and we know that Malaysian market is pretty resilient. So in terms of diversification, you also want to look at a Malaysia fund. So is there an angle to look at Malaysia fund? I think yes, because the support of liquidity is still very strong for the Malaysian market. This is something that we took up from the Bursa Malaysia. You find that the foreign retail and institution is not that high. Okay? It's only 22%. A lot of support that come from local fund, the local retail and the local institutional. We also have this pickup of this PDI, and the proprietary day trader. So this is the details of what EPF, PMB, QAP, and all that. Now, we know that earlier we also have a concern that EPF may starting to have a net outflow. Okay? But then later we understand that no, this is not going to happen in the near term. In fact, in the next 10 years, they will still continue to have a net inflow. Now, this is very key as a support of the Malaysian market, because if all these bodies, all these GLC have continued inflow into their fund, their exposure to equity market, there is still room for exposure in equity market. And there's it can be a very strong support of the liquidity in the system of the Malaysian equity market. The only thing that we miss out is the foreign. You look at what Indonesia can do very well. Besides, they have a very strong structural story on Indonesia, very strong growth. It is also because it is the foreigner favorite. Okay? There is a lot of skepticism for the foreign investor. Therefore, all this year when the Malaysian market do very well, not so much a contribution actually come from foreigner. But if one day Malaysia can really attract the foreign inflow, you'll find that Malaysian market can do much better than the current 14 time, which is quite possible. But what will happen, as I said, still a lot of things to deliver and all that in the whole ETP project. And as well as long as Malaysian market fundamental continue to deliver, the stimulus is there, economy is healthy, it is just a matter of time the foreigner will come back. Another angle to look at is that if the whole Asia region is very positive, we as Malaysia cannot lag behind so fast, so much. Okay? The rally could happen in the other that has sold down very badly, but it's just a matter of time they may find also the laggard market. They may also come and look at Malaysia. So at different angle, Malaysia can actually stand out to be a part of the foreign portfolio. The foreign holding is actually really low. It's like flattish, over the years. We used to be enjoying about 27% of foreign ownership, but now it's flattish at 22%. If we manage to improve this thing, the foreigner come back, I believe the Malaysia valuation will be very different from now. Okay? So this is another potential catalyst. And finally, for a strong market to continue, we need a lot of story, a lot of activity in the capital market. And last year, we have a lot of activity, a lot of news. And this year, we also expect there's a lot of news. It looks like a bit quiet in the first quarter or so, but we believe that there's more news in the second quarter, especially on the IPO pipeline. We believe that there is some IPO in the pipeline that could happen in second quarter or third quarter of this year. The big one being the Felda Global Venture, and also the integrated healthcare, which is the Parkway, the hospital business and healthcare business. And also we are looking at perhaps, there could be, AirAsia is actually looking at listing their Thailand and Indonesia subsidiary. They are also looking at AirAsia X. So besides IPO in the pipeline, there's still some REITs that is going on that could be listed sometime this year. There could be potential for local investor. There's also a lot of activities on the M&A angle. Already we are talking about the merger of Kencana Sapura. Whether or not there will be more coming, I do not know right now, but I believe all this activity will spur the market interest. Acquisition, a lot happening last year. Come out to be quite positive surprise that people are willing to pay a lot to acquire KSR, KFC, Proton, SP Satir and all that. Okay? What will happen this year, we believe that M&A story will still be strong. But of course, right now, I can't tell any of the M&A story. Anything come will be a surprise and very positive for the market momentum. Okay? So with this, I just talked about the 5 catalysts. So many catalysts for you to bring back for the Malaysian market. At the same time, we want to highlight some of the concern. Now, some of the concern that we have for Malaysian market, it is that we are still continue to concern about the Europe situation. It's not that we totally write off that they have solved all their problem with this 3-year LTRO. The issue is still there. The concern is still there. Okay? So, but this is the regional concern that I believe Robert has already addressed. The second thing is China growth. If China were to decline a sharper than expected kind of growth, GDP number, then it will be a negative surprise to the market. Okay? But of course, now market is looking at the soft landing. We are also actually looking at the soft landing. And for China market to really deliver a very, very poor number in terms of GDP is very risky for the China government. Because there is a change of leadership in China government. I believe that they will still deliver pretty good number. But the risk is in the first quarter, maybe the first quarter number will be a bit weak, and then bottom in either first quarter or second quarter, and thereafter you find China will really run. okay, doing better in terms of economy. So our worry is more on the regional. Domestic front, we have one major concern. And that major concern, if you go everywhere, everybody is talking about that. That is the upcoming general election. Okay? There could be a lot of uncertainty for this general election that has caused Malaysian market to really look like going nowhere. If you look at Malaysian market, the first two slides I show you, right? We have been flattish. Last year doing quite okay relatively to the region. But this year, the region run, a lot of inflow coming into Asian market. But Malaysia has been pretty ignored at this time. It's because people are still concerned about what will happen for the general election. Okay? This is a major concern. But our view is that as long as the economy is doing well, the fundamental of the corporates are strong, any negative news or any uncertainty create good opportunity for long-term investors. So we do not know the market timing even the time in the market is quite difficult. But if you do a dollar cost averaging and you continue to focus on stock selection, continue to focus on valuation, we'll be doing well over a longer run. So if you find that there's any surprise on the downside, we believe that is a great opportunity to accumulate stocks, especially those really corporates with good fundamentals and good positioning to win more contracts or do much better in the longer run. Okay? So this is overall. I have to put a slide here highlighting the political risk. I think I do not need to go into very detail. All of us know very well about the risk that we are talking about. But I do believe that Pembantu has done a very good job in TP, and as long as our assisting government still have a control, this whole thing will go through well. Okay? If any changes over the political front and all that, if there is any negative surprises, as I said, take it as a good opportunity to pick some good stocks and good fund. If you are looking at the longer run, we should be doing quite well. Because the underlying of the fundamental of Malaysia hasn't really changed much. We need to increase efficiency, and as long as we can deliver well, it's just a matter of time that foreigner will come back and relook at Malaysia again, and we think that we can stand out pretty well in the Asia region. Okay? With this, I will close my session.